Welcome to Bears in Exile. Today is August 10th, and it is time for the market overview. We'll be looking at everything that we do every night. And before I get started, I want to apologize for the website being down. I'm not sure why it is at the moment. The entire ISP that it's hosted at is down. So I haven't been able to get in touch with them. Can't reach their webpage, nothing. So hopefully it comes back up soon, and hopefully people look at the YouTube channel instead of just looking at the posts on the website, or else not too many people are going to see it. Anyways, here we are with the Dow, and ugly day, wiping out everything that we had yesterday. And on the daily running thread, Legatus had mentioned, momentum needs to slow. And my response was that if it was just a big green bar next to a big red bar, then yes, absolutely. But we had a tail, and maybe that would make a difference, and it didn't. It didn't at all. So leg was completely right, and we got this ugly, another red candle. Only good thing about this candle today is that it did not exceed the lower shadow of yesterday's. And there are some subtle changes as we've been pushing down the lower Bollinger Band. You can see that it goes outside of it, it comes back inside of it, it goes outside of it, it comes back inside of it, it goes outside of it, it comes back inside of it, and oh, it is not outside of it today. So that, along with the lower shadow, could be interpreted as momentum is slowing, but the momentum is so darn extreme, does it really matter? So anyways, there it is. Look how ugly the stinking short-term moving averages are. This is just disgusting, but that is what it is. Beyond that, most everything turned down again today. The histogram, RSI, stochastic, CCI actually not turning down, but anyway. 14-day RSI moving average, still a little bit to go before it crosses the oversold line, and hopefully it won't stay down there too long when it does, but we shall see. 60 minutes, looking for divergences. And divergences sure haven't helped us too much in the past 2 weeks, but someday they will fix. CCI, divergence forming. Maybe it could get broke if we get another big down day tomorrow. Stochastic, definite divergence. RSI, definite divergence. And MACD histogram, possible divergence if we get a lower peak over here. So they're all over the place, but for the moment, doesn't mean a darn thing. And on the daily, as a matter of fact, we have on the CCI, the stochastic, perhaps on the RSI if it were to turn up. So there it is. Very ugly. Just ugly. SPX, it looks better than the Dow does. You'll notice that the real body did not close below the previous real body. So, I mean, that's something. Beyond that, just like the Dow, secondaries are all exactly the same as the Dow. Going to 60-minute to look for divergences. CCI, yes, could be broke. Stochastic, definite. RSI, definite. And if we get a lower low on the histogram, then we will on the histogram as well. VIX, this one was kind of all over today. At one point we were down pretty big and it had not jumped that much. We ended up with a spinning top type formation. It is outside the upper Bollinger Band. Everything pretty much is still pointing up with the exception of CCI. We do have the down tick that we're waiting to see if it resolves. We have 3 more days to see that resolve. And yeah, beyond that, it is what it is. It's kind of interesting that it is not a perfect mirror of the Dow or the S&P. So semi-interesting. 60-minute, looking for divergence. CCI, yes. Stochastic, yes. RSI, yes. Histogram, if we get a lower, higher peak, does that make any sense? Then yes. XOI, yep, big red bar, confirms Dow and SPX. When oil is bearish, the market is bearish. The end. TNA, ugh. A fat inverse hammer, not a pretty one. 14-day RSI moving average, finally getting really low, and hopefully we'll be able to start turning up soon. But secondaries all similar to the Dow and SPX. 60-minute looking for divergence. CCI, if it's not broken, yes. Stochastic, yes. RSI, yes. And histogram, yes, and most definitely if it gets a lower peak or higher low peak. Alright, UUP, source of our woes today, from the bullish perspective. Big green candle. We were saying yesterday how the short-term moving averages were just ugly. It looked like it had come up for another test and was backing off. Well, we had an NDE today with the rumored problems in France, and so we got this, and the market was just all over that. So perhaps it is finally reestablishing the correlation between inverse correlation between the market and the dollar. So that is a pleasant development if that is the case. It is unlikely that we'll get full crossover and separation prior to entering the bar. So I'm not overly concerned about that happening at this moment, but of course that can change. FXE, and we were talking about it doing its little wave looking formation, and it has yet to go back up and do its upper part of the little wave. So yeah, kind of a nasty down on the euro today. Could have been worse, and the market was happy to follow suit. GLD, look at this, another outside the upper Bollinger Band day, complete candle body outside. That is so extreme. We have another gap to, you know, add to our little count of gaps, and it's almost a spinning top. If the body was a little bit thinner, it'd be a pretty one, but it's not. But it is a weak spinning top. And SLV, very nice move today for silver. As you can see, short-term moving averages come out. It come to kiss the bar, and now it's bouncing off. This is very nice looking for silver. You know, to have a retest of the bar, which is proper, bounce off and re-expansion of the short-term moving averages is a guppy entry. So over the next day or two, we'll see if that happens. Secondaries all essentially pointing up, so it does look very nice for silver. And that's going to be it for tonight. Just a little short, sweet, abbreviated market overview, and hopefully the website comes back up soon. It's going to be the second time with this ISP that we've had some network problems, so that's a bit concerning. I don't really want to switch. I have a really good deal with them, but I also don't like the website being down. Don't like their website being down. That's really concerning. But anyway, there you have it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.